morning, good afternoon, good evening, wherever you are in the world right now. I am so glad that you are here. I am so looking forward to today's session, as I do each and every day, spending this hour with you. It is one of for sure the highlights of my day. I know that we cover a lot. Yesterday's session, we covered so much. Today we have more to do. It's what we do. It's time to sip on the matcha, grab a cup of coffee, an espresso or a tea. We're going to get into it. Today's going to be a good one. It's going to be a lot of food for the mind. It's going to be really open up a lot of doors, and it's going to help a lot of people make a lot more sense of the overall financial system. Let's get into it, everyone. Happy New Year. Happy New Year to everyone. Anyone who's just making it, just joining us as we get going, cooking dinner. All right, so that's good to know, Brooke, because I will try to be as descriptive as possible of the things that we are looking at, but this is a visual one as well. So, and often for myself, I know that the second time I listen to something, I get a lot more out of it. This is going to be a good one. This is going to be one major piece of the overall puzzle, and it's just going to take CTM one step further. As we look, right, we should get Peter on. That would be fantastic. I think, but by the way, I'm glad you said that. This is something that should be shared. I know that like we spend the majority of our time focused on Bitcoin, right? Now, all markets without question, and I think that we have, it's all on video, an extraordinary track record in these 2 years, which have seen the markets do a lot of things on being on the right side of the macro across the board. But I think that this video should be shared with everyone, or like all the gold bugs. There's a whole universe out there of people focused in on gold. And I think that right here, what we're about to do is the best of it all. So I think this should be shared with them. And I don't say that with any type of arrogance at all. It's the markets. It's extraordinarily difficult and to get right. But this information should be shared with people who have a real passion for the markets, and especially for that hard money for gold. There's no question about that. So we're going to start just really quick with the introduction to Bitcoin. Gio, absolutely, brother. And we are looking at Bitcoin still just holding on, right? Overall markets, Wes gave us a great description, and we're looking at the DXY slightly off. Maybe I could jump in over here and show you. Oh, that's a little preview. Oh, we're going to get to it all. Let me find out the DXY really quick. We'll start over here. And the DXY is kind of like off a little bit, and it's kind of just really ranging over here. That is right. Do you all remember that we said getting above this line, this trend line of resistance, that we were looking for the dollar to range within this area? Here it is, right? A couple of things like points of reference. If we break this Dean trend line, Dean pointed out a while ago, that would be a sell impulse coming back under this area of support that we've had 2 touches off of. Breaking down below here, that could put a little bit further weakness out on the dollar. But right now we have a firm dollar. It's expected to stay within this current range that it's in, and it's just at the low end right now. We expect support to hold until it breaks. But if it breaks, we know the point where it will be breaking. Is that why we're seeing potentially gold up 0.5%, Bitcoin up, a little more than 0.75% right now? Is because the dollar's off? Is today nothing more than a dollar story? Probably. The dollar, the Bitcoin doing its best to hold on over here. Looking at the trend line that we're watching, this is from the April high, and then the peak of wave 2 and the wave 1, excuse me. And we certainly have been holding that as support thus far. We'll see what happens. I want to talk briefly about this. Now, I have this as yellow, this area that we're in right now. Yellow is, caution, and it's because we broke out the correction of wave 2. And once we broke out of the correction of wave 2, I've gone to yellow. Now, if we take out, I'm going to go back to the candles over here. If we take out these lows over here, and we came pretty close to closing below there just yesterday, at that point, we go back to red, in my opinion, right? Now, I want to talk about when we go to green also, okay? When we'll be going back to green. We here at CTM, and this is going back to mid-December. Everyone sees it now. We talked about in mid-December. Hey, watch for this. Watch if we break out above the correction of wave 2 and then come back down and take out those lows, right? And we were like way ahead watching for what would be the most difficult situation and scenario. And here we are. And that seems to be playing out. Now, hopefully, we will go back to red if we take this out. But then it's fine to go back to red. And then when things clear, move forward back to yellow and then to green. But hopefully, if this happens, it's a quick event, right? Skip up and then get ready for that breakout upward soon. But listen, we don't know what's going to happen, so we have to stay cautious. That's why we're cautious right now. For my opinion, you're looking at some people. You remember 53,000 when we broke down over here on that Friday? We made sure that everyone took profit from all the positions they'd been leaning into since the beginning of wave 1 and out of the correction of wave 1 into wave 2. Is that where people are looking for to say, oh, okay, we made it, that we're green again? Probably a lot of other people are looking for trading above 53,000 to look for a little bit of a green light. Do you remember back over here, 50,000 when we did the same thing? Did we wait for a break above 50,000 to get bullish again? No, we followed what was going on at the time. That was the descending wedge that gave us the clue, right? So what about right now? What are we looking at? What would set us off green? Assuming that we're able to hold this range over here. I don't know that that's going to happen, right? But if we do, I think for me, that what I'm looking at is this last little swing high over here. So it's a lot lower, right? Let me go ahead and put that on some candles over here. I'm going to put my mouse over so you could see on the left and you could see the area of resistance. This little bit of a swing high over here. Is there anything major looking back to the left? No, not really. What about over here back up at 53,000? Yeah, I mean, listen, once I think getting above 53,000 is going to be like, okay, now we can take a breath. The work won't be done. What do I mean by that? Well, just above 53,000, we have this danger zone, right? Danger zone between, let's call it 58,000 and 60,000 that we need to get above. And potentially, if we don't, we could be looking at something like this. Let me try to find it, pull it up for you right quick. We could be looking at something like, a head and shoulders developing on Bitcoin. This would be the neckline, by the way, would be the important piece. But we could be rejected in that area, in that zone. That's the bearish case for Bitcoin. We will be watching it. Just because we get above $53,000 does not mean that the sky is clear and it's all good. We still have a lot to repair until we get back to price discovery and trading, roaring in the bliss, above new all-time highs. It's not going to be easy. Why, by the way? Why do I have that area of it over here between $58,000 and $60,000? It's just this retrace over here that we see during the bear markets to the 0.382 fib. I did it over here using the wick, and I did it using the close. And that's why if I use the wick down, right, then we have this area here around 58,500. If I use the close, it's 6,000. So we just have that range to watch out for. And with all that being said, I'm not waiting for us to trade above 53,000 or 60,000 to call this green. I'm waiting over here. I think we get above this area, this last swing high. Let's call it, it looks like 48,800 in that area. At that point, I'm going to go to head back to green. So I like when we get the opportunity to hold green for a while. We wanted this green to extend out further, right? We were looking for wave 1 into wave 2 and then off to the races. But we had to, look, expectations are one thing. Execution is another. And we're all about execution. It's good to have ideas. It's good to have some type of base case that you're positioning yourself off of. But at the end of the day, you need to trade what is happening. So is it possible that we flip-flop in between colored areas before a trend takes place? Absolutely. That's what it's all about. It's fighting it through. I just want everyone to understand what is next, why we're in yellow, when we could potentially go down to the red zone or back to a red zone, or when we could be entering that green zone. And that's where we're at today. And that's Bitcoin today. We're just kind of like hanging in there. Descending wedge, right? Bob, so glad that I saw you, Bob, because you're the person that set off this whole thing that we're going to be looking at today, right? And what do I mean by that? Oh, I wish I could find it. I think we could do that. Boom. We're looking to gold, right? So, by the way, and we're gonna for sure do that right now. But before we do that, let's are we looking at a descending wedge? Do you remember over here that this was a pretty clean and clear descending wedge? We here at CTM picked on it way early, right? And is that what we're looking at again? Especially if we take out these lows, then you could see more of a descent. If we take out these lows over here, then it would really look like that's appearing. Right now, I think we're playing it clean. And what do I mean by that? We just have the breakout of the correction, the green line of wave 2. There's the breakout over there. Now, this is this breakout of wave 2. You use the bottom of the wick, right? If anyone took a leverage position, we talked about whether or not you wanted to use the lows over here as well and why. And we talked about if you were doing that, if you're risking 1% here, if you're using the stop loss down here, you're still risking 1%. It's the same risk per trade. Your position side changes. So that's where we're at right now. And we're going to keep moving forward because I want to get into good morning, Gemma. Good morning, Glenn. Good morning, Roberto. Good morning, Zach. Everyone, I'm so glad that we're here together on this hump day, as Dave would say, on this Wednesday, midweek. And I want to take a look and explore a little bit with you all, looking at gold, right? We came up yesterday and we're like, hey, Boggs is like, could we take a look into gold? I was like, absolutely. It's time for us to begin looking at gold. Give me till tomorrow. Well, here we are, and it's tomorrow, and we got a lot to do and uncover over here, a lot. So I'm going to go ahead and I'm going to start like this and make it a lot easier with a blank chart. Do you move the line of repair? Jose, the line of repair will be moved and is often moved, right? When entering a trade, black diamond trades, if you're stopped out, right? So this line of repair from the correction of wave 2, right? We'll have to do two things, by the way. If we take out these lows over here, right? And at that point, for those that are looking to re-enter, what do? You have another black diamond over here. I'll talk about that as it happens, Jose. It's not happening in real time, so I'm not going to do it. And then this breakout over here is still in play unless the low of the wick is taken out over here. So we'll do both, and the next entry that appears will help people get into. But this entry is still valid right now off of the correction of wave 2. So we're not going to do that today. Something interesting happening in the Bitcoin dominance chart. Before we get into it, let's take a look and try to find out what we're talking about. So let me go off of this and pull this up. And could we be looking at something like this about to occur? Now, I'm not trying to tell you that Bitcoin dominance is going to fall all the way down into the teens or anything like that. All that I'm doing is pointing out is this. Last January, if you go back to last January, you saw, this is over here, January the 1st, 2021, Bitcoin dominance fall drastically, right? And then make a big leg down. Why that happened, Bitcoin was running like crazy. It did about, in this time, let's call it a 4x, right? It went from about, well, I don't know if that's correct. I would like to be correct. So let me just tell you really quick. Bitcoin January the 1st, right? Trading at, let's call it 3,000. So it did a 2x. It did a 2x in that time. Now, obviously, we know that if you just go back even just a few weeks from that point, Bitcoin did a 3x. You go back another 3 weeks, the beginning of November, Bitcoin did a 6x, right? So let me come back to Bitcoin dominance, and just so we know where we are, and there it is. So Bitcoin was running versus Ethereum and versus the alts during that period from November and through December, where it went up from $10,000 to $30,000. And then why Bitcoin went from $30,000 to $60,000, which is over here mid-April, you saw Bitcoin dominance fall drastically. So people are worried right here, right now, if we see Bitcoin take out this line of support. And whether or not that's happening right now or that's a fake out, I'm not sure. But you could see about 10 days ago, I took a look at this and I was like, you know what? Maybe we're going to drop the floor. And if we drop the floor, you know what? Maybe that's going to be really bullish for Bitcoin. because the last time that happened, Bitcoin was running with the rest of the market. So I guess what I'm getting at over here, I'm not really concerned about Bitcoin dominance whatsoever. If Bitcoin dominance starts to drop and we see Ethereum and things like, every other altcoin out there starting to do alt season things, at the end of the day, that will also be bullish for Bitcoin, in my opinion. But anyway, that's a way to look at it. Brad, Jose, what's going on, everyone? Glad to see you in here today. Boom, 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 boom. Gold. All right, let's get into this. I'm gonna help you. 53 silent majority. Hit the thumbs up. That's right, Craig. Thank you for smashing that like button here as we get going in today's Wednesday session. I always appreciate that support and the love. Silent majority is strong and well positioned in life, continuing to do wonderful things. I'm going to start off just looking at this chart of gold, and I'm going to add some important events to it. Okay, so here's what I want to start off with. The first important event that everyone is familiar with was the crisis in 2008, right? And the massive expansion of the Fed's balance sheet, right? There's been another one of those. That was very recently in March 2020, and the massive expansion of the Fed's balance sheet. So I want you to make sure you understand. I'm turning off the comments just so I could make sure I focus now on this time over here of what I want to present with you, and then I will come back to them for sure, check in with all of you, and we will continue the discussion. But I want to make sure right now that everyone follows what I'm about to present on gold. It will make things a lot clearer, and it's going to make your overall understanding of the markets and how they work together act a lot more clearer as well. And then at the end or tomorrow, we could bring that all back to Bitcoin. So we're looking at two pivotal events. Notice, by the way, in both of those pivotal events, right before the crisis, right, Bitcoin came off. This was 30% if I remember correctly from back then, that gold came off 30% until the peak of the crisis. The Fed expands the balance sheet massively, and then gold continues to run. It had been running up into that event. Same thing over here. Gold had been running up into the 2020 crisis. During the crisis, if my memory serves me correctly, gold comes off 15%, right? In comparison to what? Bitcoin 62%. Came off 15% and then continued to run up. Those are our first 2 points of reference. Let's continue forward. The next one I think is very important over here. This is Operation Twist, okay? Operation Twist, oh my goodness. It's very pivotal because you can see that clearly put a peak into the price of Bitcoin, into gold in 2011, right? That's when the Fed, I want to get this right and I don't want to get this wrong. So let me go ahead and make sure that I tell it to you as it is, right? Here we go. Boom, 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 boom. So sorry about that little bit of delay, but it's very important, and I want to make sure I get it right. So the Fed is trying to, at this point, they are selling short-term bonds and they are buying long-term bonds. Okay, so they're trying. I don't want to get it wrong. So with that, I mean that is correct that they are selling short-term bonds and buying long-term bonds, and what they're trying to do is push down the rates of long-term bonds by doing that. All right. Next thing that happens, this is, everyone is familiar with, in 2000, the dot-com bubble burst. Why that's pivotal, because you can see over here, I'll explain that at the end. Let me continue explaining everything that happened. All right. The next that I have over here is December the 15th, and that is the first rate hike of the last series of rate hikes. Very pivotal point as well, because you could see, well, I'll start explaining now and I'll get into it. That's when gold started rising. Okay. Then we have a couple of other points. We have QE2 and QE3. I do not think that these are very important. I think it was important for figure out what was going on to include them, but I don't think overall that they are crucial to our work over here. The next thing that we have that is very important is also when quantitative tightening began, and that was in March of 2018. Shortly after quantitative tightening began, we then had the problems in the repo market, right? And that is everything I want to include on the chart, except for I added one thing over here. When the rate hike cycle began, this is in June of 2004. Okay, so that wasn't on this chart, but I want to make sure that we all start at the same place. At the bottom, and I'll be talking about this a little bit later, you could see over here, this is the Fed's balance sheet, right? And what's happening and when. And then over here, I also have the stock market, okay? The NASDAQ we're looking at. So where do I want to start with? And I think right now, since I have over here what I want, the rate hike, I think I'm going to remove QE2 and QE3 because I think they're more noise and I don't think they matter so much for what we're looking at over here. So I'm going to remove them from the chart, try to make it a little bit clearer. All right. And then the same thing with the repo market breaking. It's a pivotal event because that leads to the crisis and the next massive expansion. But I don't think we need to include that on the chart as well right now. And also QT beginning, right? So I thought at first, now everything here is important because it led to the overall understanding. My initial thought process was that it is when QT begins that the countdown begins to that next, massive expansion, because this is like the ticking time bomb to the next crisis. A lot of people are worried about in 2022, the Fed tightening and the problem it's going to cause to the markets. I think it's very important to understand that, first of all, it is already considered tightening as the Fed tapers. That's just not adding more liquidity month over month. Actually, they begin tightening or taking away liquidity during quantitative tightening. And it's my understanding, it's my belief that then after a certain amount of time, this time it took 2 years, that will then cause a breakage in the financial system. It causes a shortage of dollars. It causes problems in the repo market. And that would be like a ticking time bomb to the next financial crisis. I think that if the Fed does move towards hiking in 2022, I think then realistically we need to be looking at, is it possible, will they go for quantitative tightening as well? Will it? By the way, I remember I was reading last night an early report from 2019, and some investment bank, I don't remember which one it was, I think it was UBS, was saying that they expected in March 2020 for the Fed to finish its quantitative tightening and then move on to more stimulus. Very interesting. They had March 2020 right, but the Fed actually, as the repo market began to experience problems, and that was down over here where I just removed it from September 2019. That's when they began expanding their balance sheet again. They didn't want to, but again, that quantitative tightening causing some problems. So I think that the quantitative tightening, by the way, led me to understand that, you know what? It's actually when the Fed begins hiking rates that the countdown begins. By the way, there's an extraordinary amount of time when here's the NASDAQ at the bottom, right? And you can see the Fed hiking rates, and what happens? The stock market continues going up and up and up. We had over here in that one period we looked at yesterday together in the video where I was talking about, I just want to find it, all right? We were talking about over here in December 2018, this period in the fourth quarter 2018, where we saw, because of Brexit and because the Fed kept hiking rates, we saw a 25% correction in the markets, right? Big deal. And the markets were able to recover out of that. We talked about that in depth yesterday. I'm not going to get into it, but it's all related. But you can see that the markets kept going. Back over here when the Fed began raising rates in 2004. So this, by the way, is an important period, right? Between when the Fed started hiking rates until the financial crisis in 2008, the banking crisis, was also the housing market bubble. The growth, it was very hard to take off if you remember what was going on in the economy at that point. It just there were lots of green shoots. The green shoots were never sticking. It was a very difficult time in the markets. Gold did very well during that period. Gold, by the way, at the peak of the market, right? At the peak of the dot-com bubble bust, right? Because over here, when you're experiencing growth, gold is unattractive. Gold is unattractive. What just happened over here in this period over this last year from March 2020, we're seeing lots of growth everywhere from all that stimulus. And gold, why initially coming out of the gate hot and hard before everything else, right? It then really during the rest of the period hasn't done too much. I think what we need to focus in on over here is moving forward. What is the best place, the right place in time to really look if you want to put capital into gold? What's the right time to attack, right? I think it's very clear from what I'm looking at, and I did it from many different angles. I'm going to try to show them to you as much as possible. That when the Fed begins its rate hiking cycle, which then begins the countdown, right, to when the next recession is going to happen, right? That is the time that you want to be looking perhaps to allocate more capital to gold. You could see it clearly over here again in 2015 as the rate hikes began. That was the particular time to move into gold as well. Now, it didn't take off right away. There's some other things I want to talk about, so let me jump in and come back to them like this. Let me start over here. This is Bitcoin chart I'm going to remove right now. Looking at the equity markets and gold. And I think what I want to start off with is just looking at, or reverting back to, is what we've looked at recently on gold, right? So we've been looking at this from a place. I did it on silver here on CTM in 2021. The trades weren't taken on gold, but it was out of this correction right here. Let me draw it in, right? It was out of this correction right over here. A black diamond entry, right, that we took. I took a position on silver, and then it wasn't able to push, right? You remember then it was exited over here. It was entry and exit, and that was the only that I had high expectations for precious metals, especially for silver in 2021. They never materialized. Nevertheless, the trade was there. The next thing that we did and was draw the last trend line over here. What I'm getting at is that if you're trading this just off of CTM style, right? We had another trade over here. I see it in there. If you're trading it off CTM style, it's going to get you into the right entries to manage your risks. At the same time, do you want to be focused on something that's going nowhere? Do you want to allocate your capital to something that's it's just not time for it to be there? Now, I don't know what happens the rest of this year, as this year begins in 2022. I don't know whether or not, I was looking at headlines on Forex Factory yesterday. The top, like the latest like 20 headlines were all about inflation, like literally inflate. And I was like, wow, I remember here at CTM in back in March and April in 2020 talking about how this was going to be uber asset inflationary. But here we are in the beginning of 2022, and it's now like Market Watch and everyone else, they're talking about the inflation. And as you know, yesterday, because I pointed out, hey, listen, it's time for me to kind of be consulting what's going on with the deflationists and see what's going on. And maybe we've seen an area of peak inflation. And maybe that we're going to see, especially year over year, a flattening out, right? Now, I obviously don't think prices are coming back down. They've made that step up. But what happens if the central banks, if the Feds are, there's no urgency for them to go ahead and tighten by entering those rate hikes? Because why the economy is not growing or experiencing any type of growth. And in that situation, maybe we're going to see a lot of markets go flat in 2022. Maybe it would only not be gold. Maybe we're going to see a lot of that happening also in the equity markets as well. Now, that's depending on how far that taper goes. Right now, throughout the first quarter, they're continuing, even though they're tapering those asset purchases, they're still coming. I think that we see in the first quarter, equity markets go on to make new all-time highs. But after that, maybe we flatten out a little bit. Maybe. But what I'm getting at is maybe that the Fed and the other central banks do not necessarily need to go ahead and actually start hiking, right? Maybe even because inflationary pressures subdued, or how they measure them at least, maybe they could actually come in and with some stimulus. And we looked at that like this over here. Just let me show you really quick. Going back to the last hiking cycle, this is kind of where we are right now, that the Fed came in with QE2, right? Maybe what happens next is we go from the taper to QE2. That could happen. We're ready for it. We don't know what they're going to do. They could also go on to tighten. If they do go on and start hiking rates, I think that's a strong signal for those that are looking to take a position into gold. That's the time to begin positioning into gold. Number one. Yeah, so this is kind of essential over here, and this is something that's very important to me. Of course, we're very centric on the markets, very Bitcoin focused. With that being said, we're able to really get it right across all asset classes from afar, but with precision. At the same time, it's very important not only to focus on what we're doing here as investors, as traders, but also as people. So together, you all inspire me to always do better, and I'm grateful for that. So a couple of questions that are very important. First of all, Wes mentioned something about interesting that after we saw the December 15th rate hike shortly after Bitcoin started rising. That's what I was doing this morning before going live with you all. And that's why I said tomorrow's session, perhaps we'll be looking at it. But, it's every time we've seen rate hikes. Now, Bitcoin's a very new asset class, we can't go back to those early rate hikes in 2004 and see what Bitcoin did, because Bitcoin was not around, right? But we could see that when we've seen rate hikes in the past, Bitcoin each time has responded positively to it. Very, very interesting. I'm going to be digging in a lot over tonight to present with you tomorrow what's happening during these periods with Bitcoin. And then we could use that as a guide going forward. The questions come up as far as, what's the best place to buy gold, right? Are you looking to buy physical, or are you looking to buy paper gold when you invest into gold? I think that if you're a short-term trader, if you're a swing trader, right, at that point, paper is, in my opinion, the best way to go about it. At the same time, if you are looking for a position that is going to be, let's say, throughout the, Fed begins hiking, right? And you're like, what? I want to be involved for the macro cycle. And I think this is a good time to start, positioning into gold. I think you want to own the physical gold. There's no third-party risk. It's one of the great advantages of it. There is so many places to buy gold. It's absolutely ridiculous. In the U.S., you could use Amex. They are absolutely wonderful. I think it's very smart to actually buy physical gold and hold it in a vault overseas. It gives you lots of advantages. You could do that through our friend Peter Schiff and Pacific, whatever. You could do that better through Mike Maloney, right? There are a lot of guys who spend a lot of time offering a lot of good information about not only gold, but the overall macro, like Mike Maloney, like Peter Schiff. And you could use those as avenues to go ahead and buy physical gold and store it in a vault, whether it's in Singapore, right? If you were in Canada, maybe you want to store it in Utah, in the US. If you were in the US, maybe you want to store it in Canada. Maybe you want to store it in the Cayman Islands. Maybe you want to store it in multiple geographic locations, right? Now, does it make sense if you're kind of like worried about the apocalypse happening, that you want to have maybe, some silver coins at the house? That way, like, if there was some type of really, God forbid, of disaster, that you're able to, you might want to do that. But if you're actually storing gold, I think it's best to do it in a vault away from you. They're really fantastic. I've used them a lot in the past, Gemma. There's no question about that. How could you store in the U.S. after they took it away from you? Well, that's why I don't think that you should store gold in the country where you live at all. And Michael Saylor, by the way, has done a fantastic job of explaining why it's very hold for anyone, why it's very difficult for anyone over the course of history to hold on to gold for too long. So Singapore is absolutely beautiful, beautiful option, no question about that. Wes got the APMX link over there, and so with that all being said, I don't think that this is the time. Like for me, for myself, really, the signal is when the rate hike begins. Could we be experiencing something like this right now, where gold is bottoming, right, and is going to be rising before the rate hike? Like, could gold have bottomed over here? This was a pretty big drawdown for gold, right? And off the all-time high. And could it actually be on an upward slope until we see? Imagine we saw sometime in middle of 2022 a rate hike, right? What I'm thinking, or what I believe, is that once the rate hike cycle begins, that's when you will see more activity, more funds flowing into gold. And then instead of it going sideways, then it's going to start moving. So even though, you might see this, you might see that upward slope. Like gold could even make a new all-time high before they go out and they raise rates. But the time they raise rates, I think that's the time that you want to be looking to take the position. And it's a long trade, right? It's because the rate hikes, they lead up to what? The recession, right? In this case, are we looking at a recession, or are we looking at the rate hikes leading to another crisis and a massive expansion, right? And out of that massive expansion, that's when gold again, just like it just did, and it baked it in 2008. That's when you get ready to exit that position, because all that stimulus, all that extra expansion of the balance sheet and the new QE purchases, that should lead to growth, right? And if that's happening, that's when gold becomes unfavorable. So with all that being said, the last I guess the thing that I'm going to mention is I working on having, as people here in CTM, I know that a lot of people over the past 2 years, a lot of the silent majority, I mean, I have a folder full thick of things that we've done here, but I'm talking about even further out. And as people have really using that time and calculated risk to go ahead and create that generational wealth, I believe that diversification is going to be very important. I'm looking at kind of like creating the ironclad portfolio, of important assets that also at different times are offering some type of diversification. The Australian dollar, Swiss franc as a risk off asset, right? The 10-year, and these two are kind of correlated to each other, right? Gold and the Nasdaq. I think this is going to be the core makeup of that portfolio, and it's going to be something that we'll be talking a lot more about together during 2022, so people are able to go ahead and position themselves ahead. So Bitcoin having trouble holding on to those gains from today, going negative now, and we've seen a lot of that so far. I know this is only the third trading day, but it seems overnight, Asia actually able to take up Bitcoin, and then it being sold early in the U.S. Are we just looking at really some big players looking to do their best to play whatever games they can and accumulate right now? Either which way, we are in an accumulation zone in Bitcoin. So that's that for now, I think. What else we got? Any other questions or things that we want to talk about? Yeah, I don't know. I've had all great experiences with them, but we got some other some SD bullion and JM bullion of better pricing. Okay, there you go. It has been a long. I was buying my physical gold and silver a long time ago. So what else, friends? Thank you. Yeah. All right. So without 45-minute session, a little shorter than normal, but I think an important one. For me, a critically important one. Putting this all together and figuring it out. Again, CTM from the very beginning, as we've been online together with the creation of this channel, always talked about for us the greatest signal is following the Federal Reserve and the central banks. And here you could see what gold is doing and how gold's rhythm and gold cycle is depending on the central banks and what they're doing and what their actions are. I think that is critical for understanding for what that relationship looks like. Is it only for, I know that a big one has been in the past for Bitcoin, the halving of the miners reward. It is what has set up the 4-year cycle, whether it was the bull phase, the bear market, or the accumulation front running the next halving. All 3 phases of the Bitcoin 4-year cycle. There's no question about that. Has also the Fed's moves had an effect on Bitcoin? By the way, it was also, is it strangely enough, right? It was not only the December 2015 hike in Bitcoin that Bitcoin reacted well to, and then the 2 hikes in between, but it was also that last hike in December of 2018 when the Fed made that policy mistake and they shouldn't have hiked rates, and they did. That was the actual end of the Bitcoin bear market, almost to the date, and set Bitcoin off. So is there actually going forward, is Bitcoin going to be more, a lot of people are looking at, well, how institutions maneuver in and out of Bitcoin and what effect they're going to have on Bitcoin's structure moving forward. Does the 4-year cycle nature still have effects on it? And then are we looking at, more importantly, if it is becoming an institutional asset, how that is going, how the Fed and central bank activity is going to be affecting the new structure of Bitcoin. So, yeah, I think this chart shows it better. Well, I don't know if I see the cup and handle as well. Right? Unless are you looking at, at that? I don't think so. But a cup and handle could be something that looks more like that in the future, right? I'm not sure. And again, just to go back to it, even the last CTM entry, right, on gold, continuing to offer stop down over here, right? Entry over here, still open. I just don't know if you want to get your money caught up in gold right now. And that's probably one of the main takeaways of this session, is that there's going to be a time to attack. Do I think that let's call it, anyway, that's that. I think so, Jeffrey. I think so, and I hope I did a good job presenting it all. Without a question, I know that. You know what? Let me go ahead and also share this chart with all of you. Do I have everything on it? Yeah, I have the repo. I have the 2000. I'm missing one hike over here, so let me come to this one. All right, just let me get it on the chart for you. It's June 4th, 2009. Let me go ahead and do this. 2009, 2004, June 2004. And then we just had rate hikes begin. But let me go ahead and share this chart with you as well. So I didn't get a chance to talk about it. But since I'm sharing the chart now, and on the bottom of this chart, you'll also be seeing the NASDAQ. I was looking at particular periods. I noticed over here at the peak, right, at the dot-com bubble peak, right, that's when gold became more attractive as growth stopped in the U.S. And it went up pretty substantially, 50%, right? But it was a slow move compared to what happened once the rate hike began, right? So then I went back and I was looking, Well, what happened during that area when we saw the markets peak right before 2018, right? This is the markets bottoming in December, but it was during October, November, and December that they really came off. And I noticed that was also a nice bottom for Bitcoin, for gold, right? So you could look at it like this way, and I was trying to look at it like this, and then that's this area right over here, right? So here's where the Nasdaq peaks, and that looks to be a good place to get into gold. So I was trying to figure out how we're able to do that, right? Is right. So by the way, like CTM entry on gold, this is the way to do it. But is it because you saw over here the Nasdaq was taking out that sell impulse, right? So right now we have on the Nasdaq. Let me come back to the Nasdaq. This was the other part that I really wanted to talk about with you that I didn't get the opportunity. So why we're here together, let me finish. Like, you know, the Nasdaq is what right now? It's 3% off the all-time high. Do we think that like we're calling the top in 4%? Do we think that we're calling the top in the Nasdaq? I mean, at any time it could top. I don't know, but we haven't seen any type of technical breakdown. And the first one that would be the break of this line right over here, right? The break of that line over there, that would be the first potential sell impulse of a technical breakdown. And I have this channel over here because I'm not sure. So really it would be this one over, you know, a breakdown of this bottom channel. Right now that I could say with like clarity, that's a big technical breakdown. And if that's occurring, is that then the time to move into gold, right? So these are the things that I'm looking at. I hope it's helpful for all of you. Jordan, but we're still focusing on Bitcoin, or are we watching gold now? Well, I don't want to confuse anyone at all. Yesterday, the question came up, right? Could we look into gold? And we focus on Bitcoin each and every day, unquestionably. That's like 98% of our focus is on Bitcoin, right? But at the same time, we also look at the dollar. We also look at Ethereum. We also look at the Ethereum Bitcoin cross. We also look at the 10-year, and we also look at the Nasdaq and S&P 500. Gold has been off the Kion list for a long time, and guess what? That worked out really well because gold was doing nothing, right? During all this period over here, right? When we have not been following gold, you know, we took this trade over here on the silver, exited, but aside from that, gold has done nothing. So but I think that it's time for us to add gold back in to the list over here, and that's all. But it's not we're going to start trading or focusing in on gold. It's all about Bitcoin. I want to be very clear about that. I mean, it's not just for you, Chio. It's for everyone else. I want everyone to be very clear on that. That this was just a presentation of an update on gold, so that everyone and I put it back on the list now that we could follow it from afar, right? And then it's also like, okay, you know, the Fed actually hikes rates for everyone that's in CTM. That's a signal. Hey, if you're interested in taking a position into physical gold, now is probably the time that you want to do that, as opposed to like, you know, people, you know, following the move at the wrong time and then holding on to that gold and being in a position that they don't want to be. So I find it hard to believe we're not in a recession now, right? If rate hikes are a trigger for a recession, then are you ultimately I wish I had the exact amount of months that from when a rate cycle begins, from when a rate hiking cycle begins to a recession. I think the earliest it's ever happened has been 11 months. And I think it's like 36 months for that a rate hiking cycle triggers a recession. So for tomorrow, I'll try to have those exact numbers. I think that's important for us all to be aware of. But there's a long time out between when the Fed begins hiking rates to when a recession occurs. And I think that's something that a lot of people out there get wrong. Like a lot of people out there get a lot wrong, including like that the Fed's expansion of their balance sheet in QE in March of 2020 was going to be deflationary. We were like, from day one, we were like, no, that's uber asset inflationary. Boom, right? So I think one of the things that people are getting wrong right now is that as they look at the Fed tapering and potentially, we don't know that they will, get ready to hike rates. But they think that that means that that's the end of the world. And that's the music to stop playing. We looked at it and why at like there could be some near term volatility, like the equity markets could correct as the Fed hikes rates because a lot of people will sell out of fear, right? But if you look back at what happens historically, that's not nearly the end. The end is when like that hiking, that friction, like in some time in the future causes things to disrupt. A lot of people, again, timing is everything. A lot of people understand that, okay, rate hikes begin, that means recession. There's a long time in between those things happening. And, I didn't share it. Let me share it really quick. Does that make sense? There we go. Cassidy and everyone else. John, there you go. There it is. Jordan, when gold moves, do you think silver moves faster? I'm kind of like, when you all know that I told everyone well in advance that Ethereum was going to outperform Bitcoin, right? Nevertheless, I'm a Bitcoin guy. Do I think that, at certain periods? No. Jeffrey, no, I don't think. All right, hold on. There are certain periods, there's no question that you're going to see silver outperform gold. However, right, like, so the rate hike leads to the crisis. The rate hike leads to the crisis, right? During that crisis period, gold outperforms silver like by enormously. The only time that you would prefer silver over gold will be out of that expansion. Like after the crisis, coming out of the crisis, you could look for silver, potentially to and will outperform. It did even in this last one. But gold is the safer play. Like I'm about like reducing my risks as much as possible. So there are people out there who are looking to take on as much risk as possible. And that's why that you see all that rampant speculation take place in altcoins. I'm looking for what I deem to be the least risky with the most potential, right? So for me, that's gold, right, over silver. That's how I look at it. But with that being said, also, I think that it would make sense for us to look at the silver and gold, cross. And right now, I believe it's trading somewhere around 80. And that historically has been a good place to position into silver over gold. And so if you see, for example, that, wait, everyone, like the moment that Jerome Powell says that, we were wrong and the inflation's not transitory. And we were like, what are you talking about? We told you that a year ago. And that's like the peak move of inflation. And I don't know that is. We're seeing obviously basically an energy crisis unfolding right now. We're seeing obviously supply lines being disrupted massively. We could still see inflationary pressures continue. I don't know, right? But we could also be seeing that flatten out a lot. And if that happens, and that we actually don't move into tightening, there's a good chance that we're going to see risk assets. That includes Bitcoin, that includes silver, and that includes the equity markets. More so, equity markets and Bitcoin really continue to have another massive leg up, including if they add QE2, I should say, right? Here we are right now on the taper, right? After the massive move up on the taper. And then if it's not rate hike, but QE2, that could really continue and push this out further. And in that case, I think silver outperforms gold during that period. So in a roundabout way, I hope I answered that well. But I would like to bring up in tomorrow's session briefly, towards the end maybe, the gold silver cross. Talk about right now how it's trading around 80, that it's a historically high point. I also believe during these crisis periods, right, after the rate hike, so much time afterwards, right, that one of the best trades perhaps to put on is actually gold versus silver, because gold massively outperforms, right? Gold is the safe haven bid, and that's almost like nothing's certainty in the markets, but that seems like a very sure shot to me. So that's something that I'm just replanting in my head, and why I think it's going to be some time before the next crisis. As that next crisis unfolds, that seems like a really strong trade for myself. So what do you all think? Do we have a good session or what? Did you enjoy it? Is there anything else that we want to talk about or add to? You guys have 110 thumbs up with 161 people in here. So I'm going to assume that we enjoyed this session. For me, this is the goods. I really enjoy this type of intellectual exercises, and I really think that it continues to sharpen our overall understanding of not just Bitcoin, but the overall financial markets. So, thank you everyone. Thank you everyone for focusing in on me today, spending the time doing something a little bit different, but so important. And again, tomorrow, like, because we're at Bitcoin right now is doing what? Bitcoin is hanging out in this yellow area, right? So we got some extra time here because we're not loaded. It's not in the green, and we're not aggressively taking any type of leveraged margin entries, looking for those black diamond, double black diamond, and conservative entries. So we have some time to put into the rest of the financial markets. I think I'm going to go ahead and for tomorrow also take a look at this premise along with what's happening in Bitcoin, and just to see if that offers another layer of the matrix for us. Thank you, my brother. Thank you so much. Thank you for being here. It is the 3 tacos for today. You know, you guys are all the best, Matt, Wes. Yeah. And thanks, brothers. Thank you so much for being here. Right now we're just looking at, I'm glad you asked because we didn't look at it. You have no idea how important this is going to be for CTM going forward, but I'm letting you know it is. So yeah, we're looking at S&P 500 off maybe 2%, right? By the way, just so you all know, this is on log. The question came up, like, as far as log and linear, and generally speaking, I use log when I'm looking at an exponential asset class over a long period of time, such as Bitcoin, such as the NASDAQ, right? Such as Amazon. And most of the time that we're trading, we're using linear. Right now here on the S&P 500, this is on log. And by the way, I'm going to be viewing it from log and linear. And all of the differences is this. Hold on. Sorry about that. I'm just trying to explain, make sure I keep everyone with me, right? That center line comes down over here. So the top line is different on both, like that would be the top line. This is on linear. So I'm not sure which is correct. So I have to look at them both until I figure out which one I want to, and then this is on, and then you can see the difference, and that's on log. So I'm not, well, is it? I'm not sure because the center line comes up over here. You see the touches? So I feel like we could have the potential, if we come up higher, to be able to come to the top of that range. So listen, I have no problem when I don't have clarity to be like, it's unclear for me. So here's what I'm doing to get clarity, right? The same thing that I did over here on the break of 53,140 on this trend line over here. I looked at it every day with you on log and linear just because I didn't know what it was to do. So I don't look, I understand if I'm like not clear, that might make you confused, but I'm not clear. So this is how I'm looking at it. And right now we're just seeing, S&P 500 off a couple percent off the all-time high, 1% off the all-time high, consolidating here. and right along this resistance. And that trend line is resistance. That green line I have over there, that's just what we're doing right now. So there's not much to say. There's not a place for us. We only look for, as it goes into correction, for the entries out. The last set of entries out, although I was calling the seasonality of what was taking place, right? There was no entry. It happened too quick. So we're just waiting on the S&P. So, Tanya, everyone, thanks for being here. Yeah, this is, an important one. And you got, it's so important you said that, because at the end of the day, it all comes back to, here we got Forex. Here we got, the 10-year, the macro. Here we got the NASDAQ and the gold. And in the end, it's all going to be a complete picture. Now, I don't have Bitcoin on here, because Bitcoin always, in my opinion, is its own core holding. I'm not going to talk about it now. This will be a diversification strategy, and this diversification strategy would be a small portion of your overall portfolio. We're not talking about it now. So there we are. All right, everyone. Thanks. Thanks for being here today. Thank you, Gemma. 2 year. Thank you for letting me know that, because I never know how it's received. I always have such high expectations, especially when there's something really important that I want to present. So either which way, lots of love. Dean, you got to go through this whole one. No, the FOMC today should be a non-event. We're just seeing meeting minutes released today. So I don't know why. I know normally FOMC meeting is at 2 o'clock with the press conference at 2:30. I don't know why. Is the meeting minutes at 2:15? I don't know why I think that. Let's just check out what time they're coming out. So at 2 o'clock, we have the FOMC meeting minutes. It should be a non-event. If anything, though, Dean, with how hawkish they were at the recent meeting itself, there's just the opportunity that they could actually sound a little more dovish than expected. The only other thing I could add was that the October meeting minutes are normally a non-event for myself, like complete non-event. The October meeting minutes is what led me to relay to all of you that I felt with great certainty that they were going to taper in November. That was ahead of the rest of the market. The rest of the market, after that last non-farm payroll, said there's no way that they're going to taper. So aside from that, that's the only thing that ever stands out to me for it really being important. I think it's a non-event. Cross my fingers. Who knows? John, thank you for that. I think it's very important. Glad you, right? And just again, you see a lot of people, gold bugs, Peter Schiff himself talking about it. I don't know. I've never heard this type of perspective before. I personally have never heard that perspective before. And I tried hard to see the correlation, by the way, between what was going on with the 10-year and gold. There was one other thing that I wanted to point out, so let me find it. This peak over here, I could see over here clearly it was the beginning of Operation Twist that put the peak into gold. So I tried to find out, well, what was the peak over here, right? And the only thing that I could come up with, what happened was that's when bonds made their test of the low right over here. So you can see my mouse on the top right quadrant, and then you could find gold on the bottom left, and you could see that's where gold's peaking. That's as bonds came in and made that double bottom, right? And then from there on, yields began to rise. So I'm glad I added that in, because I spent a lot of time preparing, and sometimes I forget some things. But I think that's an important thing to point out, is what was happening over up here. We know they peaked here on Operation Twist, right? Yield related. So what happened over here? Well, it was also yield related, right? So that, and that's the most important, like, entry is rate hike. Exit. How do you time the perfect or potentially perfect exit? It's when something happens when bonds bottom out or top out, I should say, right? So, well, I'm glad we ended it on that note. That's an important note to end on, you know? No. Hold on one second, John. I want to end it for sure, Dean, with this question over there. Thank you, Zach. Thank you, Zach. Yeah, I think this one is worth rewatching for sure. And I'm sorry. I'm sorry that sometimes I know that we put out a lot of information that's not really just like it's really some it really makes you think, right? And I know some people just like bullish hopium posts, but like we get into it here, and I feel like I know if you miss a session, sometimes you missed a lot, but look, it's what we do, so we're just gonna keep doing it. But I know it's a lot to take in, and that's why we'll try in the months ahead, in the weeks ahead, just give those little bit of refreshers. But this was one that was very important in my opinion. There's definitely a correlation for the DXY and 10-year. I think Matt is very good at providing that type of analysis for us also, Vakanet. There's no question about that. Gold is manipulated. That's also important insight. Gold is the most heavily manipulated asset in the world. There's no question about that. There's the worry in the future that they'll be able to do what they do to gold with the rehypothecation with Bitcoin. That's all a possibility. So Dean, I don't recommend trading around the FOMC time at all. So the best FOMC meetings to trade are live ones where they're going to be hiking rates. Those are the ones. And the next time they do it, Dean, the next time they do it, that's when we'll do it together. And you know what? I mean, I do it off the 1 minute time frame. I will show you my strategy. We'll do it live together. But it's not this time, and especially not for meeting minutes. Okay. I don't think, Dean, I don't want to see you over trading on that. You know? All right. So the ones that are worth it are for sure the live rate hikes. Thank you so much for being here. Thank you for everyone. Yeah, I'm with you, Vakanet. I think, are you talking about, Vaka, clarify for me, are you talking about gold, which, yes, or are you talking about Bitcoin, which also, I believe so. I believe we're in accumulation on both. But great, Joseph, glad you jumped in with us, you know. Shell Fox, Simon, everyone, have a beautiful, Silver Johnson, have a beautiful day. Thanks for being here, everyone. I wish I could pronounce your name, my brother. Thank you for that love. I appreciate all that, man. I really do. I appreciate the love. Have a beautiful day, everyone. Looking forward to tomorrow where we get to do it again. Have a beautiful day. I'll talk to you soon.